Ben, we appreciate your help on this morning as well. Market's taking it kind of hard. Too hard?
I think it's a emotional overcorrection. It's way overblown. I think that there were overall lack of new policy initiatives speaking about, stimulating the economy that came out of the party Congress, but that's not unexpected. These types of announcements don't happen now. And so I think this is just an overreaction to the list of new nominees to the Politburo, a lack of Li Keqiang and others being there that were seen as economic drivers, and other just consistent emotional overreactions.
Do you expect the overall net trajectory of his use of power to be one that employs economic openness or economic closure? I'm not sure why the latter would make any sense.
I think stability is first and foremost at their core. And as a party, the Communist Party draws its legitimacy from economic development. People have to feel that they are going to have better lives a year from now than they do today. And so those two things have been a bit in contradiction over the last couple years of zero COVID policy. Our hope is now that as the world is coming out of zero COVID, or the world already has in China, hopefully soon, and the stability now of Xi having another 5 years ahead of him, that those two things can become congruent again, and we can see a focus on driving economic growth that isn't seen as taking away from the stability in the market.
Ben, the fact that we got this GDP reading overnight and it was delayed to begin with, at least here in the U.S., there seems to be a lot of head scratching about and skepticism about what that reading actually entails. And when we talk about things like stimulus in China and we talk about weakness in sectors like real estate, what are you seeing on the ground in terms of economic activity there right now?
Certainly, those numbers are better than expected, but they came in parallel with export contraction. So major markets like the U.S. dropping their exports into China by almost 11%. And so I think that leads to a clear consumption decline or is an evidence of a consumption decline. Because of zero COVID, people are retaining wealth, not spending. Discretionary income has fallen, discretionary spending falling. People aren't sure in many instances where the next paycheck is going to come from. And so the net result of that is that they're consuming less. And so I think that's the kind of counterbalance to that overall picture that looked positive. And certainly we're not out of the woods yet on the challenges facing the market from a housing perspective. Zero COVID and the looming threat of lockdowns continues. And so there's not a lot of positive news in spite of that overall GDP figure.
Ben, I mean, bigger picture here. The view seems to be that Xi Jinping is taking more and more control over the economy, state control. So from your perspective, as somebody who's investing in companies, best use of capital in terms of actually putting it to work, how do you view that? Is there still going to be a vibrant world for what you do in that country in terms of VC and the companies that are worthy of your investment dollars?
I believe there is. It's not that this is, China has always been, communism with Chinese characteristics. And in many ways, I've always felt it was more of a free market than even what we experience in the West. Monopolies were able to kind of run rampant. There was actually fairly latent regulatory intervention. Where we are today, though, is in a place where there are certain sectors, particularly in the consumer space, that have already crystallized, and there's not a lot of room for new opportunity and growth. So the growth really has to come from these industries that do have more state-level involvement and support required. So those being the biotech space, core technology, which is particularly going to see growth now as a knock-on effect of kind of continued U.S. sanctions in the space. And there is an entwinement of government action and those sectors because they are so strategically important. We don't see that as bad. We see that type of regulatory and capital support that will come from the government into those sectors as positive. It just doesn't look like the traditional kind of freewheeling, consumer-focused technology market that many were accustomed to 3 to 5 years ago.